Good morning. Well, the Fed did what was expected. They raised interest rates yesterday. So we're going to take a look and see how that may affect the housing market going forward. But the big news really in Orlando continues to be inventory woes and the lack of housing inventory. Good morning. I'm Brenden Rendo with the Homes in Orlando team at NextHome Neighborhood Realty. Joe won't be with us today. He is in believe Minnesota on a business trip, but he'll be back next week. This morning, just kind of wanted to start out with the news that we were all kind of expecting, and that was that the Fed went ahead and raised interest rates. Now, a lot of people are speculating that this will be the last one. And my kind of gut saying 50-50 chance. Because their goal of their inflation number of that 2% is still way too high. And it's being very resistant to everything that's going on. Even though we're seeing unemployment shoot back up, we're seeing another bank failure, and we actually have another one that may be probably within the next 2 weeks going under. Pac West is getting absolutely crushed right now with their stock price. So we could see another situation. What'll be interesting is if they go back to JP Morgan Chase and ask them to help with the bailout again. Because what a lot of people don't realize is that bailout actually violated several laws. The main one being that no bank in America is allowed to hold more than 10% of the assets of deposits within the country. And with that purchase, JP Morgan shot over that 10% threshold, but the Treasury and the Federal Reserve, FDIC, all endorsed it. So kind of goes back to the old rules of what's good for you may not be good for me, and we'll enforce the laws when we feel like it, which is always frustrating. So we've got that, and then when we look, a lot of people right now are betting on the market that in the June meeting that they will not make a change, that the rate's going to stay right where it is between that 5 to 5.25. I think we get another bank failure. Yeah, I think they can't. I just don't think they can, especially with the amount of commercial mortgages that are due to renew. And we've gone through this before, that there's roughly about $2 trillion worth of commercial paper that needs to be reset or refinanced within the next year, couple years, and a good amount currently. And when you see that jump in payment going from $3,000 to $6,000 a month, and you're not able to push up the rent because of the vacancies, it's a no-win situation. Who wants to underwrite that paper? I wouldn't make any sense. It's too much liability. And this is going to cause continued problems within the financial sector, and especially with a lot of these small regional banks who underwrote the majority of this paper. So there's a lot of things going on in the background that economically are just make you nervous, make you worried. And when we get into the housing inventory, I think that's one of the things that we got to look at is right now our new listings are down 22%, according to Redfin. And then if you look at the Mortgage News Daily, right now we're seeing they're showing a nearly 30% decrease in new listings. That's actually almost as big a decrease as we saw during the COVID initial shutdown, where we saw a 37% decrease in new listings. So people are just really pulling back, and the comes back to the major factors that we've talked about in the past, which is one is why, as a seller, am I going to sell when I've got a 3% mortgage? I'm now going to, if I go to a new home, yes, I'm going to make a good profit. But if I end up with the same mortgage amount because I've upgraded and my home price has gone up $200,000, and I end up with the same mortgage, but now I'm at a 6.5% mortgage rate, and I've basically doubled my mortgage payment. Why do I want to do that? And then the second thing that is being built in currently, and I think it's very reasonable, because you've got Bank of America, you've got Chase, Jamie Dimon coming out and saying that we're going to have a recession. The Fed's says we're going to have a recession coming up. People tighten their pocketbooks, and they're not going to overextend themselves where they may have thought, okay, everything's good, the economy's good, we're going to continue. You know what? I do want to move up to that bigger house. I do want to, maybe change neighborhoods, go to a new school district. People are double thinking. They're pulling out the pencils. They're calculating. They're figuring it out. That risk right now in this current economic environment, with inflation going up, everything getting more expensive. Common sense says it doesn't make sense. And so I think we're going to continue to see that shrinking of the inventory. And in Orlando region, this really is the big thing, in that we look at our total actives just from January 1st, our active listings are down almost 25%. That is a huge decrease. That means that for, our pool of buyers is smaller because interest rates are up. But for that pool of buyers that are out there and are qualified, there's going to be less and less selection. And we are actually starting to see some multiple offer situations come back into play. I just had one recently in the past couple weeks. It wasn't the crazy, 30 offers, 40 offers, but we did have multiples. And as a seller, it does help you out. It gives you more flexibility, and you don't have to cut your price like you did in the past. And you're seeing that the spread between listing price and actual sales price is continuing to shrink. And it has shrunk quite a bit over the past couple months. When we get back into it, here's our numbers for the past week. End of the month, of course. So our numbers are going to shoot up. We shot up 605 sales. And our median price actually took a pretty good increase, up to 7%. Nationally, or in the state of Florida, the number actually was about a 2% increase year over year. So we've kind of hit a bounce to where we had continually dropped, but now taking a little bounce back up. But here's the major factor again. Single family inventory decreased to 149. And we are really starting to get into the beginning of the spring season. So that inventory is just going to continue to tighten up, making it harder for people to move or to find a home. And it's going to make, I think we're going to get into that multiple offer situation. I don't think we're going to see the $20,000, $30,000, $40,000 overbidding price again, because I think prices have just gotten too high and the rates have gotten too high. But we may see, that $5,000, maybe even $10,000 over asking price for people to get into the homes. And it's very likely we're going to see that this year. The condo market stayed very consistent, 159 to 143. But here we go again, getting into the original list price to sales price. And this has gone up nearly 4% since January. January, we were sitting down to where it was almost 92, maybe 91%. And then our final to list, you see where we're at 98. So it's only about a 2% decrease. And then in the bread and butter market, which is your really $300,000 to $500,000 market, you see that there's really not much wiggle room whatsoever. You're at 98%, so less than 2% off the final list price is being able to be negotiated. And again, this market, you're seeing less days on market. Buyers are being more cautious. They're making sure that their dollar's being spent where they want it, but still the homes are not going to sit long, simply because if it's priced right, presented right, they're not going to sit long at all on the market. And here you see, again, average days on market took a nice dive down to 48 for the past week. And this going into the spring, I think we're going to continually get down. And we're probably going to be looking at less than 30 days within a very short period of time of days on market. And especially if we continue with this trend. Just down, 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 down. And if more buyers come out, it's going to continue to go down. Less and less inventory. Is there anything that could really turn around this inventory? The only thing I see is if rates are able to come down. If we're able to break that 6%, maybe get down to the 5.5. But the Fed has said, Jerome Powell yesterday said, he does not see cutting rates in 2023. So there's going to be, we're in a window right now where we're kind of between 6 and about 6.75. Really haven't broke in the past couple weeks, couple months, haven't broke that threshold of that 6.75 rate on conventionals. Could we? Yeah, we could. Especially if we have continued bank failures, because when people are scared, they run to safety. Where's the safety? Gold, treasury bills, silver, those types of items. And gold actually hit a brand new high yesterday. So people are nervous. People are scared. Economically, there's a lot of uncertainty that's going on. But for here in the Orlando market, if you're a seller and you're worried about whether or not something's going to sell in a timely manner, if you price it right, present it right, and promote it right, 3 P's of selling a property, you will sell your house and you will get top dollar for it. For buyers, you're going to have to start getting up again early, checking what's listed, and maybe have to make a little quicker decision than you want to. But because of the inventory, you're going to have to make a little swifter decision when you go look at a house, because if you like it and it's priced right, it's probably not going to stay on the market. You're probably going to see it go under contract in 2 to 3 days, if not less. All right. Thank you so much for joining us. Have a wonderful day. If you like what we're doing, please hit the thumbs up on YouTube, Facebook. Please like, and please subscribe to our channel. See you again next Thursday. Bye-bye.